Hi everyone, welcome to this month's free market commentary. In this month's market commentary, we're going to take a look at the Dow and the S&P. I want to have a look at the link between the two, and we can see how that had an impact on the Dow with regards to its ability to continue higher. We're also going to take a look at it where it is now and how we can use that same information to potentially look for opportunities, as well as, more importantly, protect ourselves in case we get any fake signals. The other one I want to look at as well is gold. Gold's recently broken down and has the potential of offering some nice opportunities, so it's well worth watching and paying attention to as it might present itself for some good tradable opportunities in June. Now, to start with though, I'm going to start on cable, which is pound versus American dollar. This is just last week come into a really interesting area for us. Now, if I just close this out a little bit and we just stretch it and look historically, what we can see is since July of last year, the market's been trending higher. So we've had the move up here that was quite sharp to begin with, but then after that we settled into this channel. Now, the reason that it gets interesting is there's two key points that we can look at to illustrate that this channel may now be finished, completed, and it's now time that it may go into some sort of down move. The first one is you can see that we just last week have broken and closed below that channel, and it's interesting that even just at the start of the month we've had this little move up, and that's where we've reacted to. Now, it's quite a shallow looking pullback, so I'm going to put more demands on it. But before I go on to how we could trade this, the next stage in deciding that this looks more bearish than it does bullish is also the fact that, one, we've broken the channel. Secondly, as we've done that, we've come into it off lower highs, as well as we've not reached the high of the channel again. So that shows, if you connect the highs, you can see that it's creating a curve that illustrates that it's running out of momentum. So it looks as though for the time being the upside is finished, and that potentially we could start to see some downside on cable. Now, if that's the case, then I've got to ask myself, how would I trade that? Well, the first thing I want to look at is what is it that I need to see to really prove for the market to show its hand. Coming into this month, where we've just had this little bounce off is just a little minor area where we've had some reactions previously. We've got this low here, this high here, this high. We obviously have broken it, so I'm not necessarily looking at that saying it's a strong area, but it's an area where we've had some mild reactions. So if we start to create a consolidation here, I would look for a potential breakout opportunity to short this market. Subsequently, for instance, if I'm not a breakout trader, the next option would then be a pullback. So the next stage would be, if we either consolidate or even if we don't, I would like to see these lows broken. Now, the reason I want to see these lows broken is I want to see that this is more than just a short-term correction, because if we compare the pullbacks on the move up on cable, each of the times you can see the distance is roughly about the distance of the channel. So the one thing that I want to be sure of is that it's not just losing a little momentum, then it's pushing higher. So one, the consolidation would give me confirmation because the buyers aren't coming in, and if we break down, that would show potential strength to the downside. And from a pullback point of view, if we can break down, then pull back, we're going to come back into that minor area we've covered, and it would show that it's more than just a minor correction, and we're going to continue higher. So that's what I would be looking for. I'm going to be looking for short opportunities coming into June on cable. So we'll see what sets up, if anything. Now, obviously, whenever I'm looking and creating a bias that might be long or short, the other thing I've got to factor in is at what stage would I consider something alternative? For me, I'm not going to consider longs until we can take these highs out. Because it's running out of momentum, I wouldn't be happy trading long within this corrective phase, because, as I say, it's running out of momentum. So the other stage for this would be, if price gets back up to here, I want to see this level broken. The other thing that we could be presented though is, if we get back up there, it may be that we get a reversal opportunity. So that would be the last thing to consider with this. Okay, now moving on to gold. You'll see that gold has recently broken. Now, I've been covering this quite a lot recently because we've been watching for this. Gold has recently broken this area here. Now what we've got is we've got a descending triangle, It's not the cleanest by all accounts, but it has eventually played out, where we've now had this breakout. Now, because we've now broken out of this descending triangle, that's now created a current new low. Now that we're doing that, the question is, are we going to continue on down to this level here? And there's no reason why we can't, but it's about proving itself. Now, it's broken with a bit of momentum in that it's not really consolidated at this area, and that's what I was looking for, so it means I didn't trade it. But I've got two options now. The first option would be if we pull back into this area, I could look at the short, or if it consolidates where it is just now, I could look for the short, because I believe that based on the levels, we have the space down, so I'm now looking at alternative options. If price does come back up, however, and doesn't present an opportunity, again, if I'm looking for the long, really I need to see some significant levels broken, most likely these highs here, because it's not until then have I got a bit of clean air. Otherwise, these little highs we keep coming into traffic. So I would be surprised if I see any long opportunities in June, but I would certainly be looking for short opportunities. Now, just to finish, we're going to have a look at the S&P and the Dow. And I'm going to start off with the Dow, because on the Dow what we can see is during the month of May we had this breakout here. And one of the things I had said in the commentary, because it was a market I covered as well as within the live trading room, is if we break these highs, I want to see a significant high. Now, my first and primary reason for that is I don't want just a flush out, because price, it's not uncommon for price to move a little beyond the level that it's at. So I'm really wanting to see some strength in that move. So I would have preferred to have seen price come up here, then look at the pullback opportunity. But obviously we literally came up and reversed from there, so I wasn't going to look at the pullback opportunity. There wasn't really a sell signal either, but as we came back down to this level, this is where I would have considered it, and then looking shorter from there. That's not happened. And since then, we've been creating more and more and more a bullish bias. So for me in the month of June, at this moment in time, I'm definitely going to be looking long. The reason being is, if you remember in gold, we've seen a descending triangle. Well, we've got something that's similar. It's not, again, perfect, but the markets never are, but we do have, in essence, what is more of an ascending triangle. Why? Because we're creating higher lows, and those higher lows are then leading to the potential of a breakout. So if we can break these highs, I would be confident that we could see some upside. So I'm going to be watching that at the moment, and it's right in that area. So this is one to be keeping an eye on right now. Now, the other thing that I mentioned at the start of the commentary is the link between the Dow and the S&P. Now, what we've got on the Dow is the fact that it came up here and it pushed back down. The clue as to why that happened is actually on the S&P, because you'll notice at the same point, that's where we came up and we hit the highs on the S&P. You can just see at this point, middle of May, that's where we hit. Now, with that in mind, this is sometimes where using the Dow and the S&P together can be really useful. So for instance, one of the reasons I'm not too keen just at the moment on trading a pullback on the S&P is if we pull back from here, that means that we're actually reversing from these highs on the Dow. So what I would like to see first is I would like to see the Dow break these highs, which would then obviously take the S&P higher, maybe up to about 1940. Then we could look at the pullback, but only at that stage, because what I don't want to do is I don't want to be looking for a pullback opportunity here, when in fact what that would probably mean is that the Dow has actually then come up here and back down well below these levels here, and that's when it starts to lose some of its probability. So for this month in June, I'm going to look for the Dow to break higher, which in turn I would look for the S&P. If it does that, the first stage would be looking for a breakout at this stage. Then from there it would be see if we get any pullback opportunities. So lots going on for the month of June. We'll see what happens by the end of the month, and I'll see you in next month's free market commentary. Thanks for watching, and bye for now.